Hi, hello, welcome to Letham Trading. Now we are going to see Nifty January 2023 backtesting with CPR and the Camarilla setup. Before going to the backtesting, we will see what are our indicators. I'll briefly discuss about our indicators. Observe here, this is CPR. This is a CPR range. This is central CPR, top CPR and the bottom CPR, and the points above the CPR are called H3 and H4, and the points below the CPR are called L3 and L4. Sometimes L3 or H3 will be inside the CPR when the CPR is wide. And with our setup, the main things are when the CPR is wide, there will be a reversals. See, from L3 or H3 to L3 reversal or L3 to H3 reversals are possible in the wide CPR. And if the CPR is narrow, H4 and L4 are going to act as a major points, and there will be reversals from L4 or H4 or breakouts, that is L4 breakout or H4 breakout. These are the points, and we use this 20 EMA for market directions. That is, if the market is going like this, and if you want to enter the trade, we'll wait for the 20 EMA retracement. So we'll observe the first day of January. Observe here, the first day of the January is a wide CPR. Here the CPR is very wide. So always remember, we don't take a trade whenever the CPR is wide because the stop loss will be big. And observe the first 5 minutes candle. We will take a trade only when it comes to L3. If it breaks to the upside, observe what are our pre-analysis is. If it breaks to the upside, the momentum will be very slow, so we'll wait for some time, that is almost for 3 to 4 hours for a clear direction. Without, if the market is going in a trendy way also, we don't take a trade, because when the bulls gets breaken this CPR, the bulls will get tired and the market will stay in a sideways mode. So we'll see whether it comes to H3, sorry, this is L3, right? Whether it comes to L3 or if it breaks the CPR. Okay, we'll see. It is a consolidation. See, this is a breakout to the top CPR. So when the CPR is a breakout, it will indicate that the market is going to be bullish only, but we cannot take an entry level because it is sideways. So we'll wait for at least 1 o'clock. Yes, it is a 1 o'clock almost here. It at the central CPR, you can take a call position, but it's up to you. See, this whole the day was a consolidation day. What we can conclude here is, when it is already we discussed that if it is a CPR breakout, we'll see for a retracement at 1 o'clock. And see here at 1 o'clock, it is not a clear bullish pin bar, right? So taking a trade here at this point is up to you. You can't get a clear points at 1 o'clock. See, it was complete consolidation day. Avoiding trade is the best thing in this type of market, and according to our strategy, there is no trade for the first day. Okay, and we are going to see the next day. See the CPR relationship, it is an overlapping uptrend CPR, and observe here there is L4 near to it. We'll see whether it is breaking to the downside or to the upside, and the momentum, how quick the market is coming to the L4 is important. If it breaks the bottom CPR, okay, it is not breaking the bottom CPR, it is breaking the top CPR. When the market breaks top CPR, see, this is bearish candle and it is a reversal, so you can take an entry here at this point, but your target will be up to H3 only. We'll see. Yes, it was a target up to H3 only. The trade was over for the day, and we'll move on to the next day. Here the CPR is an average CPR and L4 is near to it, and observe here the CPR is in uptrend, right? So we'll see if the first 5 minutes candle is a bearish candle. We don't take an entry at CPR, right? So we'll wait for some time and observe here. This is a big bearish candle breaking bottom CPR and the L4 at the same time. But observe, this is an uptrend CPR, and we'll see for a retracement. We don't enter here after this first candle. We'll see for a retracement. Yes, without getting a retracement, it is continuously falling down. So we just missed this trade because we'll wait for a retracement, right? So we don't take a trade. That's it. We'll just avoid taking a trade, and you can take an entry after some retracement to this point, because the market is not coming for retracement here now. So you can take an entry at that point, and booking 100 points is an easy thing today. We will move on to the next day. Again, the CPR is going to be very wide, right? Whenever the CPR is very wide and the market is opening near the CPR only, we don't go for a trade very quick. We'll wait for some time for the market to settle down. Okay. Yes, it is a breakout. It is a central CPR, right? So see where the market is going. Okay. It was a point to L3. If the market is reaching this L3 without taking more time, then this will be powerful. Here we don't we always do the trade in the morning itself, otherwise we don't take trades. We'll see what will happen. Okay, the market was too bearish. We are not taking a trade, but if it gets reversed from this point, that is L4 to, it has broken, but it opened here at this point, right? Observe here, the market opened here and it is L4. The market traveled a lot. If it breaks L4 also, it will not be powerful, and this is a U-shape recovery. So there is a chance the market may reach up to L3 only, not more than L3, I hope. So I'll just exit at this L3 only, and we'll see what happens. Yes, it is not advisable because it is almost around 1:30 to 2 o'clock, right? It's up to you to take a trade, but we don't take this trade because that is not according to our strategy. See, we may miss sometimes this type of trade. Okay, yes, this is according to our strategy. And the next day the CPR is a narrow CPR, and the graph is at the CPR. We'll see what happens here. This is 200 EMA and this is H3. It is showing a reversal candle at that point. Yes, you can take a put position and your target will be up to L4. This is the simple trade for the day, and we'll move on to the next day. Maybe the market again will become wide. Yes, the market has become wide, and observe here, we can't take a trade in the middle, and see this candle, it is a breakout to the H4, but you can't take a trade here. But these candles are clearly indicating this 20 EMA is there, right? 20 EMA again and again taking support, so you can take a call position and your target will be up to H. Here you are entering the trade and H5 will be your target. And the next day the CPR is wide, and observe the first 5 minutes candle, where the market will always see for the market to break to the upside or to the downside when the market is inside the CPR. Yes, it is breaking to the downside. Will you take a trade at that point? Yes, we can take the trade. Yes. Okay, why we are going to take the trade here at this point itself? Because there is L3, so market may not go for a retracement, and it is not too wide CPR. So that was the reason your stop loss will be above this CPR, so your stop loss will be small, so you can enter here at this point itself. And the next day the CPR again wide, and observe the first two candles. We don't take trade at those candles, but we can take an entry at L3. If it forms a support, yes, it is a support candle. You can enter here at L3 and the target will be up to CPR. The trade for that day was over. See, if you observe clearly, the market is giving us the trade chances in the morning itself. So it doesn't matter if you are a full-time trader or a part-time trader. Even a full-time trader will not take trades whole the day. They will take a trade once or twice a day only. Even a part-time trader will also take only once or twice a day. So we'll move on to the next day. Again the CPR is narrow, and observe here there is 200 EMA and H3. So that was a point where you can go for the put position, and the trades are very simple in the Jan month, right? Okay, our target will be, see, if you miss to take that trade, what if you miss to take this trade? You just avoid taking a trade that day. You should not enter in the middle of the market. That is what you should know. And we'll move on to the next day. Here the next day, if you observe, there is H3 at this point. It is in between, so we don't take a trade, and we don't take a call position at L3 too, because in the narrow CPR, H4 or L4 are more powerful, but in the if H3 also will act as a more powerful because of this multi confirmation of 200 EMA. But here H3 will not act as a major support, so we'll wait and wait. This is a more consolidation. You can only enter after this breakout, and this is the target. Okay, we'll move on to the next day. Here the CPR is wide, so there is H3 reversal. Yes, after this first 5 minutes candle, you can go for the put position, and your target will be up to CPR. See, this is 15 days of the month is over, and our stop loss, there is no stop loss for this 15 days, but there is one no trading day. If you observe, with our strategy, we are getting only one no trading day and zero stop loss for the half of the month. And we'll move on to the next day. Here it is taking support at 200 EMA, and it is a pin bar. Though it is a pin bar and 200 EMA, we are not going to take a call position because we don't take a trade at the CPR to the bull side. So we'll wait. Even if it breaks the CPR also, we don't take a trade, and we'll just avoid taking a trade if it is staying in the above the CPR. Okay. Yes, it is clear breakout with this 200 EMA and this first candle. This is a good move, but we don't take a trade. So 17th is also a no trading day for us. If you observe, the first no trading day is also this type of pattern only. We don't take trades in this type of pattern. Remember that point. When the CPR from the bottom, if the market breaks CPR, we don't take. But yes, you can take a trade. In that point also, we told you that you can take a trade at 1 o'clock. Yes, this is the point where you can take a trade, and your target will be up to previous day high. It is not you should definitely take a trade, because we take in the morning itself, right? And we will move on to the next day. Here the CPR is very wide, and the market is not reaching to H3. We'll see the price action at H3. It is a breakout, right? We'll see for some time. Yes, it is sustaining above the CPR. So this is a no trading day. With our strategy, we'll take a reversal from this point, but it is not showing any reversal, right? So it is a no trading day for us. That is on 18th. See, this is a no trading day. This is not a no trading day because of this 200 EMA support at 130. And we will move on to the next day. Here the CPR is in uptrend, and observe this breakdown to the downside. We'll see for a retracement or a reversal candles formation. Yes, it is a retracement up to this point the market came, right? So that is a retracement. And yes, if you take a trade after this retracement, your stop loss will get hit. Yes, your stop loss is going to hit on 19th because we are on the put side because of this breakdown to the downside. So 19th is a stop loss hitting day for us. Moreover, since CPR is an uptrend, mostly there will be a call position only. But because of this breakdown, we are on to the put side. But it was a call. Whole the day the market is sideways only. And we'll move on to the next day. Here the next day the market is near to the CPR and it is again and again taking support at L3. But we don't take a trade at L3. We'll wait for some time. We'll take a trade maybe. We'll wait for some time. We may take a put position here at this point. Not at this point, the call position not at this point, because we don't trust candles at L3, but we can trust candles at H3 because of the falling market. So you can take a put position. So if you take a put position here at this point, your target will be very big, right? That is how you should trade. And observe the next day the CPR is very wide and the first 5 minutes candle has a huge wick on the downside. There is a chance of buying with the first 5 minutes candle, and the second candle is the market is too volatile for this day. Okay, we can't decide this candle and again this candle. So I think this is a no trading day only because it has clearly formed a big bullish candle, right? Where you can enter the trade. That is the point. If you are sure in the first in this candle closing itself, if you are okay, then you can go for the trade. Otherwise you can't go for the trade, right? So this is not a good thing to take a call position at that point. So again 23rd is also a no trading day. If you observe, there are 3 no trading days. And we'll move on to the next day. Here again the first 5 minutes candle is a breakdown from the H4, right? So we are not on the call side, we are on the put side, but we need the market to come down to this H4 so that we can go for the trade. Otherwise we don't go for the trade. Okay, yes, this is what I'm telling you. We should need at least one candle to the downside, and that is the place where you can go for the put position and your target will be up to CPR. Always remember, when the CPR is H4 is away from the CPR, then this rounding bottom will give us a good result. And we'll move on to the next day. Here it is an average CPR, and see the first 5 minutes candle, it is a 2 bearish candle, and this is the candle breaking this L4, right? You may take a put position at that point. It is a panic selling. You can't enter in any of the candles. If you are missing this trade, you cannot enter the trade. You just have to just watch the market. That's the thing what happened on this day. If you miss this trade, you should be away from the market, though it is giving a good move. And observe, see, sometimes you should not take a trade, because no trade is the best thing what you can do. That is, you can save your capital. And the next day is 27th, and observe the first 5 minutes candle. It is too volatile candle, and we'll see the price action. It is a downtrend CPR, right? So there is a bearishness here. This is the candle giving us the indication you can enter the trade here at this point. There is no rounding bottom, right? So there is a chance again the market is going to the same direction. Yes, it is clearly the same direction. And we'll move on to the next day. here on 30th, the first candle is a bearish and the next candle is a bullish candle. This is too volatile, so we can't take a trade. We just avoid taking a trade for this day too. And this is a fourth no trading day. We have one stop loss hit. And observe the 31st day of January. Here the market is breaking the bottom CPR. So there is a chance the market will be on the downside. Okay, the market was not on the downside. Maybe at this point we may take a put position and our stop loss will get hit. So this is the day where our stop loss was hit, and it is on 31st. So there are 3 no trading days and 2 stop loss hit, right? Whole it is 5, and rest of the days you are going to trade and you are going to win the trade. Thank you. I hope this video will help you. Please subscribe to our channel.